Some people ask me, why did you sell? How did you know it was time for you to sell? And basically, the bottom line is this index was up. So the indexes I use to follow, my number one index is the NASDAQ 100 and the NASDAQ. If I look at a 3-month low, so this was a chart from October 1st to December 31st, I see the low it came in at, and I see this sharp rise, and I calculate my percentage gains. And if I see the Russell, this is the Russell, it also went from low and then up sharply. So did the mid cap fund, so did the S&P, and so did the Dow Jones. And when I see everybody's making money everywhere, I get a little concerned. So on average, the market gets about a 12% rate of return. This is an S&P fund that you could purchase, and I use 10% on the S&P as the indicator to sell, and 20% on the NASDAQ as indicator to sell, as well as the Russell. So where I get that is if you look at the charts on the S&P fund, so the SPY is a ETF you can purchase that just basically mimics the S&P 500. If you look at the chart, you don't hardly see 20% anywhere on this chart. So if I have 20% in a short term, I'm already looking to maybe take profits off the table. It's only an indicator, it's not that I'm going to. You see here at 10 years, over the last 10 years, you got almost 12%. So if I got 20% in a short span, then I might consider selling. It'll depend on what's going on, but that is one of my indicators. You look throughout time since this fund has existed, you rarely see an entire year go 20%. So if I got a short window of 1 quarter or 2 months and it jumped 20% or more, I'm looking at selling, or even 10% with S&P and 20% on this one. This is the QQQ. Me personally, if I were advising someone, a young person, your first time investing, I would start loading this up, get this thing up to $100,000 as fast as you can, and then start working on something else. All right, and you can do that by simply dollar cost averaging into the fund, buying in on the lows, as I've talked about on my other videos. But again, 20% does not hit that often, and that's for a whole year growth. Okay, so if you look at this, 20% is a solid growth over any single period of time that I'm looking at here. When you get into other funds, I like them better because they break down the month or quarterly, what's the quarterly gains, and we don't have that, unfortunately. Yahoo used to have quarterly gains down here. They don't do that for all of them anymore. But so the bottom line is here, I just make note of these here. I know you can't see on my cursor here when I'm highlighting, but I just noted all the current prices for all the funds and the last highs and lows. So in green you see the last highs, and in the pink you see the last lows. This is how much they've jumped off the last lows. Okay, so that's where it currently was, but from its all-time highs to the lows is what I'm looking at mostly. Where it says up from the low in green, you see NASDAQ's up 21%. When it hit 21% for the NASDAQ 100, and the Russell, I have my eye on looking at selling because it was such a short term. If it took 1 year to get to 20%, I might be more on just a hold. But with that much gains short term, I might want to take some of my profits off the table just to lock something off the table and look for something else to buy. I actually shifted money from tech into utilities. So also you can see the S&P jumped 11% and the Dow Jones jumped 14%. The reason why I invest in the QQQ or suggest the QQQ is if you're an investor, you're going to get greater returns. You're also going to get greater losses, but if you're buying on lows, I think your opportunity to get a higher rate of return is going to be much better. So I'm just sharing with you what indicators do I use that tell me, hey, should I start thinking about selling what I currently own, or do I want to at least liquidate some of it and keep some of the profits? Hope that helps you.